Hello and welcome to emini-trading-coach.com. My name is Michael Glass, and we're going to go over our few disclosures before we begin our video. Any symbols we use today should not be inferred as a trading recommendation. No matter what vehicle you choose for investing, stocks, forex, futures, options, they all have a level of risk associated with them. You can lose your investment, and any investment decision you make is solely your responsibility to trade at your own risk. So we're going to talk about the events of the last week. This is a week later. I was at a conference all day yesterday by Option Animal and Trade Launch yesterday. It was pretty good, hanging out with Dr. J, John Navarian. Very cool. I'll talk about that later. But as we talk about the week that was, we basically ended the week fractionally up for the week, a small gain, 7 out of 10 sectors. Rose led by materials. Notice that materials is always at the top of our leading sector. And financials were our underperformers. But the interesting fact is that the Dow Jones has not had an intraday move 100 points in the last 11 days. And that's the longest that we've been like this for 14 years. So basically, the month of December has been blotched. Well, we've had a great year. I mean, look at that. This week allowed the Dow Jones to get up 10% for the year. The S&P is over 10%. The Nasdaq's over 15%. So the market has had a good run. Some would challenge on what the fundamental of that run is, but we trade what the charts tell us. So not gonna get too much into the fundamental of it all. But again, what's going to happen now? People are pulling their money out. We're getting into the holiday season. Actually, we're firmly in it. So, again, the month of December has certainly been blah at best. As far as overseas, nothing. Corporate news, nothing. Listen, I understand Best Buy had a surprisingly disappointing earnings and lowered their guidance. FedEx missed earnings, but they gave upside guidance. I mean, there were some things out there, but nothing moved the market. And same thing on the economic news. I understand there was a rate decision this week, FOMC rate decision, but it's almost identical to the last one. And there's some talk about what the quantitative easing has done to the bond market, but overall, the market didn't move, so therefore we didn't really have any catalyst that moved the market one way or the other. Now, when we go into next week, I only have down Adobe here as earnings. Not that Adobe's going to move the market, but there's been a lot of talk about whether Adobe's going to be taken over. Even Apple was one of the people, rumored to be interested in Adobe with that whole Apple Flash controversy. But so that's the only reason I put it on there. As far as economic events, there's nothing on Monday and Tuesday. Wednesday we have the third quarter estimates for GDP. We have Michigan sentiment on Thursday. There are some other things on there, but of course we're going into Friday when the market's not open. We have our Christmas holiday coming up here, so the market's going to be closed. So we have a sort of a flurry in the middle of the week, and then that's it. So it'll be interesting to see if we get a move Monday or Tuesday, since we've had nothing for the year, and there's no real catalyst unless something happens over the weekend here with China and raising interest rates or some overseas news, another European country debt crisis. We may continue to be blase until those Wednesdays news events. Our key technical analysis points. Well, obviously, we're in an uptrend. To confirm that, we need to get above last week's high, which is around 1250. Yet, we can find some resistance around 1255-ish. Our support, our April and November swing highs are now going to act as support. And our points of interest is if we actually get up there to 1260, 1274, I'm not sure if we'll do that in 2010, but that's our next target as far as reclaiming some of that big move back in 2008. Let's go to the charts and take a look. Here we have a daily chart at S&P 500. Our red dashed line here is the April and November swing high, so you can see that's going to be support. Some of our moving averages here. The 10 moving averages, the green, the blues, the 20, they're all going to be support, but overall we're going to watch this April and November swing high as support levels. Obviously, as we said, we're in a clear uptrend, so we're fine there. Watch the 50 moving average as confirmation. If we pull back to that 50 moving average, that will also confirm that we're in an uptrend. Our indicators down here show that we're still a little bit overbought on stochastic, still a little bit overbought on RSI, and we're heading to overbought on MACD. So even though we had a blase week, we still are on the daily a little bit overbought. Moving to the weekly, and we can see our indicators are pretty much showing the same thing. So we got overbought on the weekly and the daily. And again, we can see our April swing high support level, where we're coming into our resistance level. Well, first we had a resistance level that we see on the daily. So once we get above all these wicks, so that's why I have 1250 as also as confirmation that we can close above this 1246 level. But when we come down here to the monthly chart, and you can see here's our push down. If we come up to this wick right here, see this wick right here, and how it matches up over here. So we'll go draw a price level here. Let's grab our indicator, price level. And I'm going to match it on up right here. And you can kind of see that's where we are right now. So this 1255-ish level is why I have this as our resistance level. Again, you can see it matches up with this wick, matches up with what's going on in the past, and it's kind of where we are right now. So this 1251, 1255-ish is where I'm watching as another potential resistance level. Now, our monthly charts, Stochastics is getting overbought. RSI has a little bit more room to go. MACD has a little more room to go. So there might be a little more up move to this, but certainly you want to tighten your stops and be aware that we, really may not have any more catalysts to send us higher until 2011. As I mentioned earlier, I want to talk about a training session I went to yesterday by Option Animal and sponsored by Trade Monster. And I really went to hear Dr. John Averian, and just as charismatic as he is on Fast Money, he is in person. It was a really good seminar. The purpose of the seminar was talking about how to manage risk with options, and I'm not here to convert anybody to options. I do still trade options along with my Forex and futures trading. My options trading is more long term. But they talked about something I thought was interesting. When you think about the training, I've been through the Green Arrow training. I've been through some other training, spent thousands and thousands of dollars of training. And most of that training that you go through is spend so much time on how to get into the trade, how to identify trend, how to use technical indicators and chart patterns, and how to tie that together to make a trading setup. But to be successful in the market, you do know how to manage the trade. And I do have a video coming out in conjunction with this video. Go to the blog. I'm coming out a video with how to manage the trade, so you can look out for that. But as you're in a trade, you should have had a criteria that triggered to tell you to get into the trade. Hopefully you do. Hope you have a trading plan, a trading setup. The setup is not the plan, it's just a setup. We've talked about that. And so that setup either triggers you long or short when we're talking about futures and Forex. And so as you're in a trade, one way that we can level our emotions, and I got a great video, how to overcome your fears of trading. One way we can do that is, to kind of ask yourself, what has fundamentally changed about the trade? Is there some report about some option backdating like Apple back in the day? Is there a technical event? Have we broke support and resistance? That's your risk reward, and probably somewhere in that support and resistance, maybe you put your stop loss. It's a sentimental. Is there a rumor coming out? And those rumored effects of a trade typically be quick, down and up. Or is there macroeconomic? Is there some FOMC, some other GDP in that, has anything changed about your trading setup that should make you make any adjustments to your trade? If not, let the trade work and let your system and the probabilities of your edge make you into a profitable trader. So you guys know we're on Twitter, Facebook and Twitter, emini-coach or emini-trading-coach. And anybody that's been registering for our free video, All the links are fixed now. Thank you for letting me know. We had some link issues, but they should be fixed now. So we got a great free video course for you on how to develop a high quality setup. Hopefully that will guide you into our video curriculum where we really put it together and help you develop your own system. But again, and that's something they talked about yesterday, you can't take somebody's system. You have to trade who you are. And our coaching sessions really help you identify and develop who you are as a trader. A great futures relationship with global futures, and you have to prepare to trade, and Stock Reflex allows you to do that. In the end, it doesn't matter about all of that, what system you have, what new indicator you have, what room you're in, or if you identify some setup, if you don't pull the trigger. And we at Emini Trading Coach are about giving you the psychological capital to define who you are and being able to pull the trigger on each and every trading setup. Thanks, guys, and I'll see you next time.